To the earnings season once again. Aurionpro Solutions recently reported their Q3 numbers. Company saw its revenue and profit after tax grow. In fact, the order book also picked up sequentially. To discuss this and more, Ashish Rai, Global CEO at Aurionpro Solutions, joins us now. Thank you so much, Ashish, for joining us. Give us a sense of the order book trends. How does Q4 and FY26 look like? And also, what are the kind of guidance that you're giving in terms of FY25 and FY26?
Yeah, hi. First of all, good morning. Thanks for having me. Look, it was an exceptionally strong quarter for us. Revenue and EBITDA more or less stay around the guidance. From order book standpoint, it's shaping very, very well. Both sides of the business had landmark wins, the banking side of the business as well as the TIG side of the business for us. We launched some exceptional new products, especially the product around AI explainability, which we feel is completely path-breaking. And I think overall the demand environment remains very solid. So for the full year, I feel our guidance stands at 30 to 35% growth. We will deliver that. EBITDA guidance stands at between 20 and 22%, and I think we will be somewhere in that range, right? So I think by and large, no change to the guidance for FY25. As we go into FY26, of course, I'm not going to give any guidance. We'll do that after the year is over. But I think overall, the demand environment looks very, very strong. So we will continue to accelerate into the next year.
In the first 9 months, Ashish Rai, now the banking side of the business has led the growth, up 41% in terms of a revenue growth, while the Tech Innovation Group revenue was about 23%. So what's happening on the TIG or the Tech Innovation Group? What are you dependent on? Are there any headwinds that you face? And do you think that growth can catch up?
Yeah, so I sort of said this before. At TIG, we were recalibrating the business, especially the government and smart cities side of the business for better economics and the kind of model that we want. So it slowed it down, but now TIG is accelerating into Q4. So you'll see that growth number pick up. Banking, of course, has been the growth driver all this year. So it's been growing at 40 to 50%. And that sort of points to the strong demand environment on the banking side, right? But TIG, if you slice it, transit has been growing very strongly. The data center space has been enterprise business and going strongly. We were recalibrating the smart cities side, but we won an order. We announced Panvel in Q3. And TIG will accelerate into Q4.
Okay, so in going forward, do you think by FY26 growth will be evenly balanced between the two? And what is the revenue breakup?
Yeah, so look, I think roughly it's about 55% for banking and 45% odd for TIG. It's hard to say whether growth will be balanced. I think the way to look at it is this: demand environment for both sides of the business is exceptionally strong. So our challenge is not really demand. Our challenge is ability to service that demand, right? So we will keep on recalibrating the business as we go. And from time to time, we may slow down parts of the business and we may accelerate other parts depending on how the delivery capacity is ramping up, right? We've now been growing at 35% for the last 4 years. And that does mean we need to be very, very careful around scaling up delivery ramp-ups. You're not as resource intensive, but you need the right quality of talent. You need the product to be mature. You need the deliveries to go in all right? So I think overall we'll sort of keep growing at about the same pace, but we will probably keep on rebalancing as we go depending on the delivery capacity.
So not putting a number, but all indications are that FY26 should be similar to FY25 or better.
So look, I'm not going to get tempted into giving a guidance at this point. We'll do that end of the year. But I think the demand environment is just exceptionally strong. If you look at the banking side, transaction banking transformation is just a massive theme. Corporate lending as well, we seem to be doing very, very well. On the TIG side, on the transit payments, closed loop to open loop transformations, I think this is going to be a very strong trend for the next several years. And there is just massive demand. Data center space in India, there is massive demand. I think so. So basically, I think it's a question of how fast do you want to grow? And for us, roughly over the medium to long term, we feel 30 to 35% is the right level. We've kept it for the last 4 years since we pivoted the business. And I think we will roughly try to stay at a level which we can manage, right? I think but the thing is, demand environment is exceptionally strong. So from time to time, like banking right now is growing at 40% plus. So you will see those kind of things for some parts of the business.
What percentage of your revenues come in from data centers? And now there is some question mark over the last 24, 48 hours about this entire AI super cycle, AI compute storage, super cycle, and the impact it's going to have on data centers. So what is your dependence and your thoughts on this? Will it slow down?
Yeah. So, the DeepSeek thing is probably a mini earthquake, right? So I think a lot of people are recalibrating the expectations around the compute, but I don't think that is a known. We are the data center side of the demand for us is largely India-based, although we're starting to do some work around Asia. I think in India, the demand is not really led by AI compute, although that's sort of one segment to it. But there is a lot of latent demand in India, both around compute and storage. That will continue to power the data center growth, right? So I know there is like at a global level, you start saying, okay, what does the new world look like on the AI compute side, and that probably will get known over the next several quarters. But I don't think the data center demand in India, we don't see any slowdown.
Okay, and what is the revenue contribution of data centers?
So slightly less than, I think something between 15 and 20%. It's about a third of the TIG business, which is, and TIG is roughly 45%, 46% of the top line.
Got that. And this is growing at, for you, the data center business?
North of 35, something between 35 and 40%.
Ashish, one question. You've spoken multiple times about a very strong demand environment. You've also done a couple of inorganic acquisitions in the past. Any more on the anvil? What kind of target entities will you look at? And what will be the size of the acquisition that you will intend to make?
Yeah, so look, for us, the demand environment, so when we pivoted the business 4 years back to build out a global products and platforms player, we chose a few segments where we knew there is a long demand runway, right? So on the transit side, closed loop to open loop transformation, very, very long runway, data center space in India, AI. On the banking side, the transformation of the corporate banking side, again, a long demand runway. So we are very convinced around the demand. Now, when you go about expanding the solution stack to service that demand, we are extremely R&D led. So we build IP, we build most of our products out, right? And there is always a choice when you're sinking in that capital dollar of a build versus buy, right? So we will continue to remain open to buying instead of building products where there is an adjacency that can immediately be serviced, and it is a IP that we respect, and it's a high quality team, and that is the kind of acquisitions like we bought out, for example, Fenixys in Europe. So the other reason we will expand is like Fenixys, we need delivery capacity in the more advanced markets, right? So for us, US is now picking up strongly. The focus this year is in Europe, and Fenixys sort of plays a key role for us in terms of having delivery capacity out on the continent and in UK, right? So I think we will be always open to M&A opportunities where it makes sense for the Aurionpro shareholder. We'll never be the most aggressive buyer overall, but we've been very attractive for IP-led, high-quality teams to come and join us in terms of building out this global platform, and we'll always have a conversation when there's such a team which wants to come and join us.
Thank you so much, Ashish, for joining us and giving us a view of how exactly Q3 panned out. What's the way ahead as far as Q4 as well as FY26 is ahead. Let's now take a short break. Up next, we'll discuss market fundamentals with Pawan Parekh from Geojit Financial.